Rs.119 headquarters in Mumbai.
Welcome back. Let's start with an earnings boardroom. South Indian Bank announced its numbers. Its net interest income had risen by 8.4% and profit was up 22.5%. But there was some disappointing news on the NPA front. Mr. V.G. Mathew, the Managing Director and CEO of South Indian Bank, joins us on the phone line. Mr. Mathew, good morning. Thanks for joining. Well, actually, the NPLs have risen by 25%, the gross NPLs. What is the source of this? And, should we see more of this?
Out of the total additional NPAs of 222 crores in this quarter, 119 crores came from one large restructured account.
Okay.
We had indicated that 2 or 3 such slippages from the restructured book cannot be entirely ruled out. So, and it is equally important to note that no major standard asset has slipped.
Okay. Was this a steal, or can you give us some color about the account that went bad?
This is a Pharma account, which was under CDR, and our efforts, in fact, the efforts of the entire syndicate and consortium have not really worked out well.
So from this 2.24 gross NPA level that you're currently sitting at, Mr. Mathew, how much do you think you could bring it down to by the end of this fiscal?
We expect that, it could be in the range of around 2%, because going forward, what happens is, the slippages are likely to be a little lower. That is number one. Number two, our recovery efforts during this current last quarter, that is September quarter, some of the results have really spilled over to this quarter. So therefore, there could be some improvement in terms of recovery and upgradation during this quarter.
Okay. Mr. Mathew, what is your game plan for the coming competition from payment banks and small banks? We saw DCB announce a major expansion in its branches. Do you see the payment banks taking away your current and savings account and the small banks taking away some of your borrowers?
In fact, payment banks is an area where we need to be very careful about. In fact, our own focus on the retail, MSME areas, those things have really helped us quite a lot in terms of significant credit growth and also CASA growth of 17% this year. So therefore, we will continue to do all that, and we are also working very strongly on the technology front. So our mobile banking application is proving to be quite attractive. And we also might look at tie-ups and other strategic initiatives in this area. We might even look for certain consultancy intervention if necessary going forward.
Can you give us some idea of what the bill might be in technology, in increasing branches, if you are?
In fact, branch increase may not be required immediately beyond what we have been growing at. We have been growing at around 50 units, either branch or extension counters, and around 200 ATMs every year. And that kind of a growth is sustainable even today without any problem. And our focus is really to, grow in certain clusters, certain centers where you have got much larger opportunities for MSME, agri, and other niche areas which are of strength of the bank.
Okay. 2 internals that have improved for you are, 1, your net interest margins, which have gone to 2.67%, and 2, the loan growth, which is up about 12% year on year. Can you give us expectations for both these by the end of the year?
The NIM actually, on a quarter-to-quarter basis, on a quarter standalone basis, it will improve a little bit more, but we expect, to close the year at around 2.8. That's about all, 2.75 to 2.8.
Okay.
All right, Mr. Mathew, thank you very much for all those numbers. That's South Indian Bank. The NPA rise is a one-off. That might be a positive. And margins may improve a tad from 2.7 at this point in time to 2.8. Let's get quickly to our research team and check out what are the other stocks that we have to watch out for other than South Indian Bank. Anuj, you fire off first.
So, Lata, 2 stocks. Of course, we've spoken about Reliance.